Let's break down our featured story of the day and discuss this $1 million Bitcoin price prediction and the latest news from BlackRock, the world's largest asset manager, along with their ETF approval from the SEC. Here's the latest and greatest surrounding BlackRock. Just in, some of the world's largest market-making firms are in the mix to potentially provide liquidity for BlackRock's eagerly awaited Bitcoin ETF if the regulators approve the product, which we all know is inevitable, right? According to a person with knowledge on the matter, trading giants on Wall Street, including Jane Street. That's actually where I believe Bankman-Fried and Caroline Ellison first met, right? Now, Virtu Financial and Jump Trading and Hudson River Trading have held talks with BlackRock about a market maker role, according to BlackRock's slide deck reviewed by the person familiar with the matter. BlackRock, Jane Street, Virtu, and Jump declined to comment. Hudson River Trading, also known as HRT, didn't respond to the request for comment. Now, the U.S. regulatory crackdown on crypto this year, seeming reaction to the FTX implosion of other scandals, including FTX, we had Terra Luna, etc., has persuaded some U.S. firms to curtail their activity in the space. Bloomberg reported earlier in May that Jane Street and Jump had curtailed their crypto trading amid the crackdown, assuming the U.S. SEC approves some or all of the dozen or so apps for the Bitcoin ETFs, including the infamous one from BlackRock, the $10 trillion asset manager. That would open a new pathway for U.S.-based firms to get a piece of the action in crypto in a way that plays to their conventional strengths. Now, being a market maker for ETFs, which trade on exchanges like stocks, requires a level of sophistication and automation that only a relatively few companies can achieve. Market makers are vital to the ETFs. They're responsible for creating and redeeming the new shares of an ETF, a role designed to keep its price tethered to the price implied by the value of the ETF holdings. Now, one of the best examples of why such a create and redeem structure is so important actually comes from crypto. Grayscale Investments offers a product called the Grayscale Bitcoin Trust, better known as GBTC, whose price has, over the past few years, wandered dramatically far from the billions of dollars worth of Bitcoin that it owns, currently with over 600,000 BTC on their balance sheet. And unlike an ETF, shares of this trust cannot be redeemed for Bitcoin. Now, Grayscale has applied to convert their GBTC into an ETF, and all eyes are currently on this conversion, as this would be massive. Grayscale's initial app for the conversion was rejected by the SEC. However, the court in August actually ruled in their favor. The SEC decided in October not to appeal that ruling, another massive victory for crypto, a move widely seen as boosting the odds that the Bitcoin ETF will become a reality in the United States. You're damn right. And quoting Samson Mow, check out this prediction. Do not be surprised when Bitcoin goes to $1 million per coin post-spot ETF approval. The market cap doesn't increase linearly. For example, a $1 Bitcoin buy doesn't make the market go up by $1. There is a multiplier effect. Let me know if you agree or disagree with Samson Mow. He's doing fantastic work out there with Bitcoin adoption. I know also in El Salvador as well as in Mexico, trying to make Bitcoin a legal tender, doing his damn thing. And as Luke Mikic pointed out here, he says Samson Mow is 100% correct, and he breaks down the math to prove it. When most people calculate how much capital needs to flow into Bitcoin to push it to $1 million, they assume we need 21 trillion of capital inflows. This is wrong because it ignores the Bitcoin multiplier effect. So let's break down the multiplier effect for Bitcoin, because according to this scenario, assuming all 21 million Bitcoin are available for sale, we could be seeing a $952,000 Bitcoin price action. But here's the math. Here's how it all works. Most Bitcoin math calculations assume all the 21 million Bitcoin is available for sale. Obviously, this is not true. Over 78% of the total Bitcoin supply hasn't moved in the past year. It's even higher now. And that amount is growing year over year. Charts don't lie. The hodl waves shows a similar dynamic, highlighting the hodlers are not selling or even moving their coins. Where are my long-term hodlers at? Now, both of these metrics highlight how and why Bitcoin is so volatile to the upside and to the downside. And as Michael Saylor once said, volatility equals price force. You know what I mean? I believe that. Now, check this out. The Bitcoin price is largely impacted by what happens in the 3 to 5 million Bitcoin that is considered liquid. Here's where the Bitcoin multiplier effect comes in. Check this out. Between 2018 and 2023, for every $1 that attempted to buy Bitcoin, it increased the market cap by an average of 2.6x. Now, let's run some simple grade 11 math with our multiplier effect to see how much capital inflows we require to reach a $1 million Bitcoin price action. Check this out. Using the 3x multiplier, we can see we only need to see 8 trillion of capital attempting to flow into Bitcoin to reach $1 million per coin. 8 trillion is nothing. Just BlackRock alone has more money than that. Gold has a $12 trillion market cap. Let that sink in. But forget gold for the moment. What portion of the $900 trillion global economy can Bitcoin capture? That is the $1 million question, right? There is hundreds of trillions of capital currently looking for a safe home in the midst of the global banking crisis. How much of that capital would love to flow into Swiss bank account in cyberspace, protected by math and encryption with no counterparty risk? What happens when a small percentage of those hundreds of trillions try to buy Bitcoin at that time that it's becoming more and more scarce by the day? Understanding this multiplier effect highlights that maybe $1 million in 90 days isn't as outlandish as most people think, referring to the Balaji prediction, who is the former CTO of Coinbase, who made that prediction earlier in the year. Now, more interestingly, there are 5,000 billionaires in the world. Wow, I didn't know we had that many, but only 2.3 million Bitcoin on the exchanges. An update, this was from a few months back. There's now approximately between 1.6 and 1.8 million on the exchanges, even more of a supply shock. Now, what happens to the multiplier effect when 15 of those billionaires also want 150,000 Bitcoin, just like Michael Saylor? Isn't that an excellent question? And if you prefer the video content of this multiplier effect with this analyst Luke, check it out. I'll include it in the show notes below the video in the description. But I want to know your thoughts. How many of you feel that $1 million Bitcoin price is inevitable off the back of the approval of the spot ETF? Let me know your thoughts in the comments right down below.